Hi, welcome to the Market Alert for Wednesday the 10th of December 2014, and a very interesting day yesterday because pre-market everything was fine until around, where are we, about 12:20 when we saw the market then move sharply lower. You can see prices coming down from 17,800 all the way down and struggling at the 17,700. So just after 2:30 we see the selling coming into the market. We see the market trying to be bought back, again banging its head against the 17,700. So the professionals decide to test running the prices down. We've got a low in this bar of 17,658, and then we see a triple X signal coming into the market. We get a buy, and we see the market then going up to the 17,700 again, just closing through and then hit by selling. And there's quite a bit of selling around in this bar compared to the previous buying bar. Fortunately, this disappears and the market moves higher, but now we're in a no demand situation, very low volume there, and then we see the market turning around and coming back. Now if we just draw in the 0% extension of this bar and then just draw across, you'll see the market struggling at this area. I'll just do that again, this time click on the right bar. So you can see the resistance here as prices approach. This is where we saw the previous selling, and then we get the same thing there with the market being forced down to the 17,650 level. And in this bar, if you look closely, you will see that the range of this bar is narrower and the volume is greater. So we've got some buying pressure there, even though it's not highlighted in the test bars. Again, this is a skill you'll develop, the nuances of the market. So we see the market moving lower, buying pressure coming in, and then the market finds support at the 17,650. So prices then trade sideways. We get a buy signal just coming into the market shortly after, as prices attempt to move higher, but no sooner as this order being filled, as we see here. You can see prices being filled, we're hit by selling, and you can see the selling there. It's very large, and this is of course at a psychological level of 17,700, and then we see the market coming back, taking this one out for a loss. But the market fails to close below the 17,650. We see the volume drop off, and then we see what we were hoping to see here when we got into the market, and that was new buying coming into the market to drive through the psychological level. Again, if I draw in the 0% extension across here, you can also see that we've got professional buying driving through this area again. And again, notice the increase in volume at this psychological level. So prices then manage to get through this, and they continue to trade on up towards the 17,800 level, which is just above here. You can see just there. Prices failed to continue higher. We can see that the volume's dropped off, but the objective has been achieved, and that's to get the bigger picture, the daily chart, back to the upside, which we'll look at it in just a moment. So prices then trade sideways. We get a sell signal. We get a very quick drop to the downside there of 20 points. The market then finds support again. See how it closes back above the psychological level, and then eventually we get to the 17,800, which we were attempting to get to over here. So the market had to come back, test again to see if anybody really wanted to sell. Nobody wanted to sell, and the market was then brought back. So in the daily chart, so you can see precisely what the pros were achieving yesterday. You had selling on Monday. Tuesday the market was thrust down to the 17,650 and below level, and then the market was brought back in the bigger picture to have another go at the highs. You'll also notice that from this low to this high, we marked up the 76% on Monday, and you can see that the market now has come back and is sitting comfortably above this. if the market stays above this, we are expecting to see prices move back to the upside. So from the high to the low there, we're looking at a bit of a resistance area at 17,850 psychologically, and then 17,900 as well, as prices aim to go back to the upside. In the implied volatility, actually, before we do that, just have a quick look at the news, getting ahead of myself there. There are no major impact news items today, no high impact news items. So again, it's dependent upon how they wish to move the markets for today. And like I say, there's nothing there today that is likely to give a strong move, again, unless there is something that comes into the market that isn't actually already known there. So in the implied volatility, up slightly yesterday, 12.49 from 12.46, and 6.7 for the historical volatility. But we certainly have the implied above the historical. We could do with the implied dropping down before we get a decent correction. It's too high at the moment for a significant correction in the background, which is why the market has been bought back at this time. Right, well, that's it from me for this morning. I'll see you in tomorrow's edition of the Market Alert. Have a good day. As ever, thank you for your support. It's very much appreciated. And as ever, thanks for watching. I will see you in the next one.